The following is an update and technical analysis on crude oil West Texas Intermediate futures here off the daily interval. And currently, both the media and CNBC are heavily emphasizing crude oil and crude oil stocks. And in my perspective, we've arrived now at a critical moment in juncture. Despite widespread optimism and a ton of bullishness around crude and energy, I've adopted a near-term, short-term bearish outlook due to excessively bullish human sentiment. And it is crucial not to underestimate the potential rapid decline of oil, the price of oil, in a response to a all-out recessionary scenario here. And I believe it's a great risk-reward ratio to the short side, whereas you have potential stochastics divergence here. And then you could potentially begin scaling in the process now, if not up to the 85.72 price resistance up above. And that is a pretty significant resistance with a multitude of reactionary highs and lows really across the board there. And that is, call it a almost a full multi-year inflection point. Whereas you have even stronger a resistance up above the 50% fibs retracement, call it 93.73 price support, price resistance up above there. And then you could actually set some stops right up above this key inflection point. If we take that level out, I would only suspect a pretty quick run right up to 93.73 price resistance. Additionally, offering a very nice, clean, full position short trade setup with a potential divergence if and when we get depending on how the technical momentum indicators develop and begin the foundation process of how they are constructed. As of now, this is a near-term aggressive short trade setup. Bull traders, long traders, they want to hold this 82.61 price support here. Pretty key inflection point as well. Just a multitude, again, a bunch of reactionary highs and lows. So a lot of reaction right amongst that key inflection point. And then I believe only a ton of stops, a potential solid daily counter close below that would issue some stops right back, and a potential retesting of this primary reactionary high downtrend line that I've been hyping and harping about cuts right through the bottom of the gap off that key inflection point. And just the validity and the velocity of how we broke out of that key inflection point just further validated how powerful that key inflection point was with a much larger rally upside. Whereas we actually caught this nice, clean, minor primary downtrend line, bullish falling wedge pattern with near-term bullish and positive divergences really amongst all four technical momentum indicators. And on a complete back test there, the entire trade was good for 20.7% in gains to the upside. And I believe this comes with an aggressive short trade scenario, whereas you could have a potential one last nice clean pump up to 85.72 price support, correlating with the 382 fibs retracement, call it 86.64 price resistance. And that would give you a nice clean risk reward setup back down to 82.61 price support for a 4.6% crash, down to the 236 fibs retracement, call it 77.77 price per barrel at 10.2% of a crash, and then ultimately back to that primary downtrend line for a 12.4% crash. And if things got really bad, we'd have a complete momentum fueled overshoot, false breakout amongst that key inflection point back to 73.20 for a 15.5% crash. So very aggressive short trade setup. But again, just a pure technical analysis on where the underlying trend is heading when it comes to black gold here, and the ultimate inflation infused commodity, the master resource of the world. As far as the bullish case scenario, bullish long traders and or bull traders, they want to hold these key inflection points, especially the primary downtrend line in the 236 fibs retracement, as a potential healthy near-term pullback, and then ultimately a re-challenging of the 382 fibs retracement and the 85.72 price support. And they want to pop that level and then ultimately challenge that big level off that 50% fibs retracement there up on the top of the range. So again, anything's possible. We'll see what happens, and keep you updated if I see any more significance here on the charts.